Not sure about how your health insurance works? Don't worry, you're not the only one. Today we're going to be breaking down deductibles, out of pocket, premiums, the whole nine. Get the pen and paper out. Hey there, everybody. First of all, I just want to give a shout out to Dr. Moeller Bear that is just now taking charge of her insurance and left me a comment on one of my previous videos, and definitely want to explain how deductibles work, how premiums work, and the whole nine. Keep those comments coming. Thank you, Dr. Moeller Bear, for listening and watching and being a part of this community. Let's dig right in today. The first question we need to answer is, how does health insurance and deductibles work? How does a deductible work within a health insurance plan? Well, typically speaking, you may have an arrangement with your employer where they're going to provide health insurance for the whole company. And you are sharing in the pool and the benefits of a large pool of people so that the cost can be negotiated typically in your favor. And the employer shares the brunt of that, or maybe even all of that, depending on the case that you're in, with the health insurance company. Now, when you go to the doctor, though, or go to the hospital or whatever, you're going to have to pay something out of pocket, right? It's going to be either a deductible, maybe it's a copay. It depends on your arrangement. But the point is, the deductible is the portion that you pay before the insurance company steps in with their part. And later on in this video, I will give you an example of that, just walk you through some numbers. What is the responsibility of the employer versus the employee? Okay, that's a good question, because let's think about the example I just gave. You may be in an arrangement where the employer is paying for the policy, like 100% of the policy. The premiums are borne by the employer, and sometimes they have an incentive to do that, because the way that the current tax law stands is any, let's say, expense, including medical costs and healthcare costs, that is used for running the business, say, for instance, providing a health plan for its employees, can be written off pretty much in its entirety. So an employer does have some incentive in providing medical or health care for its employees. And that's about as far as it goes. They may have an HR person that understands that a little bit and can kind of tell you how it works, but they're typically going to give you a 1-800 number to the insurance company. And so what typically happens is you'll go to the doctor or the hospital, you'll pay your whatever your copay, and then the claim comes back to the insurance company from the hospital to say what portion is yours and what portion is the insurance company. And that's all on you. So the employer pretty much stops at paying for your insurance if they do that, or subsidizing some of the costs. And then after you go to the doctor and you initiate a claim, it's all on you. Now, I get the question a lot of, should I get a high deductible or a low deductible? And I think that all depends, right? Typically speaking, the low or the high deductible choice is going to be related to how often you go to the doctor. If you go to the doctor a lot, then you're probably going to want a very low deductible, which means that you have a very small portion in relation to the insurance company before they start kicking in, helping you with those medical bills. On the other side of the coin, if you don't go to the doctor at all, or you only go like once a year for a checkup and it's mostly preventative, take a high deductible plan, like a high deductible healthcare plan that has an HSA option. We've talked about that before in different videos. I'll link to that video up in the show card so you can take a look at that. But suffice to say, low deductibles are typically for people that frequent the doctor. Maybe you have a chronic ailment, and high deductibles can be used for people that are a little bit more healthy or don't go to the doctor as much. Deductible versus out of pocket and all these other terms like coinsurance and co-pays and all that. I want to cover that right now with the numerical example. So let's just say that you have a $5,000 medical bill, right? And maybe, whatever happened, you're going to go to the hospital and it's going to cost you $5,000. Now, if you have a $1,000 deductible, you're going to reduce that medical bill by $1,000 immediately. That's going to be the portion that you have to pay, leaving $4,000 left. Now, let's say that you have an arrangement in your health plan that the insurer will pay 80% and you pay 20%. That's called coinsurance, right? So 20% times 4,000 would be $800, which is what you're going to be responsible for. And the remainder, the $3,200, is what the insurance company will be responsible for. Now, this has to go through a whole claims process, and you'll see something called an EOB, an explanation of benefits, but that's probably another topic for another day. But the point is, is $3,200 goes to the insurance company as their portion and $800 goes to you as your portion. Now, let's say that you have a $2,000 out of pocket every year, right? Meaning that the most that you have to pay is $2,000 before the insurance company starts to kick in 100% of every bill afterwards. In the case that we just gave, you paid a $1,000 deductible and you had an $800 coinsurance. Those two equal $1,800. So you have not yet met your out of pocket for the year, meaning that you would have to have another claim of how much ever to go back through that math once more before you got to the what they would call the stop loss or out of pocket maximum for the year. Last but not least, the deductible versus the premium. Now, the premium is going to be what you have to pay in order to have the insurance policy. Now, you may pay it, like I said earlier, or your employer may pay it, or you may share the cost. Now, what you're going to see in the arrangement of all insurance products is that the lower your deductible is, the higher your premium is going to be. And the higher your deductible, the lower your premium is going to be. And you can probably think about why. If you was listening through what I was explaining earlier, you understand that the lower deductible means that the insurance company has more risk on their side of the table, meaning that they're going to have to come in and write checks for the expenses that you incur on a medical bill faster than it would if the deductible is higher. Because if the deductible is higher, that means your portion is bigger, meaning that they don't have to kick in as much, which is the reason why they don't charge you as much for having that policy. So it's an inverse relationship between deductible and premium, meaning that if you have a low deductible, you're usually going to have a high premium and vice versa. Hopefully that was helpful. Thanks again, Dr. Moeller-Bear, for submitting that question. Thank you for supplying me with the topic for this particular video. Look, if this was helpful, please give me a thumbs up, leave me a comment below. Even consider subscribing to this channel. Would love to have you a part of the community. Take care and bye for now.